A very good morning to you. Thank you for tuning in and joining us again on Market Insight. Today, the 1st of October, 2024. What can I say? It's a fantastic day to be alive. Happy Independence Day, Nigeria, and happy Independence Day to you as a Nigerian. We've come a long way, 64 years. Not a small feat, I gotta say. But listen, there are challenges, self-same challenges with which we're going to, be better off for. All we have to do is keep the hope alive. So once again, happy independence to you. I am David Chiedu, and once again, welcome to Market Insight. It's an Independence Day special, and today we will be taking a retrospective look at Nigeria's economy 64 years after. I've got a story that I will tell you that encapsulates Nigeria in its real sense, economically and otherwise, from 1960 till date. That essentially is our Independence special for today. Of course, afterwards, we're going to jump into the conversation on the situation, real situations, essentially analyzing situations as it has been since independence up until this moment. But before we go on, we'll give you a short report, or a short vox pop if you like, of what's been happening in the streets of Nigeria and helping you get a sense of what people think about our independence. All right, we'll take a very, very short break. When we come back, we'll bring you that particular report. Stay with us.
We have a lot to talk about Nigeria. So 64 years after, and I look back, I feel ashamed. There was a time in this country, even as a student, once you have admission, even from passing out from your secondary school, you get automatic employment. 3-4 companies coming to employ you. Today, what happens, even with your degree, with your first class and everything? Nothing works.
No, wetin we wan celebrate? Nothing we go celebrate you. School fees, everything don high. Food, no, we don't even eat 3 times daily again, 2 times. 3 square meals is hard to eat.
Oh yeah, we are getting to have youths determine their destinies for themselves, not depending on the country.
I'm a public commentator, and I have to tell you the fact as it is. We aren't expecting anything better, even at 64. Nigeria has gone from grace to grass. Nigeria has gone from when we used to celebrate being a Nigerian to now not even trying to mention the name I'm a Nigerian anywhere before the international community. And it's so sad. I must tell you the truth. It's so sad because when you look at the economy today, what do we get?
Governance, they should have empathy for the masses.
What we are expecting is they should reduce everything. Food, school fees, everything. Transportation, fuel, gas. Na charcoal we dey use now.
Welcome back to Market Insight. You have indeed heard from some Nigerians how they feel about this day. Now I'll tell you a story. Nigeria's journey, though fraught with obstacles, has seen significant strides that cannot be ignored. As Nigeria marks its 64th year since it began the journey to nationhood, as an independent country, many Nigerians would find it hard to celebrate this milestone or celebrate it with others. You would hear things like, "There is absolutely nothing to celebrate," they might say. And even though that they would be justified in saying that, they would not be entirely true. I'll take your mind back. Sometime in 2011, the former US ambassador to Nigeria, John Campbell, predicted that Nigeria would not exist beyond 2015. Remember? Now, at the time, this generated ripples of apprehension and paranoia amongst the populace, especially considering the state of the nation at the time. For some people, this dark and troubling prophecy seemed inevitable, especially as a few other African countries had already met a similar fate. To them, the disintegration of Nigeria was an inevitability. Now get this, it has been 13 years since Campbell's damning prediction, and Nigeria is still very much a country. Going through a difficult period, yes, but whole and unbroken. Now, when Nigeria, the most populous African nation, gained independence in 1960, her GDP was $4.20 billion per capita income, also was $93. At independence, Nigeria had a strong, undiversified economy. To remedy the defect of this, it had to diversify its economy. So, the Nigerian state invested heavily on education, which led to a reduction in the rate of illiteracy and ensured that the people gained the requisite skills and human resources to drive the development of the new nation. It also expanded roads and communication networks to allow for inroads into uncharted territories. But in order to create new employment opportunities, secondary industries and automobile plants were established. Although the government funded most of these developments with foreign help in form of loans, from countries such as Britain and the United States. Agriculture accounted for over 75% of foreign exchange earnings, 68% of GDP, and also created employment for about 65% of the population. As oil exploration got profitable in the 70s, agriculture began to lose its prized position. By 1969, a period when the nation was just beginning to tilt towards oil dependency, the oil sector accounted for less than 3% of GDP and $307 million in exports. Per capita income at the time was $130. Diversifying into oil led to the growth of an industrial sector from the early 70s. This led to employment of foreign capital in the domestic production of goods, which rippled into increased levels of industrialization, employment, and economic growth. And by 1980, oil accounted for about 30% of GDP, while oil exports accounted for 25 billion, that is 96% of total exports. Per capita income exceeded over $1,000. Also, the exchange rate was on a steady appreciating curve from the 70s. However, focus on oil led to a steady erosion of the competitiveness of non-oil tradable goods, reflected in a substantial decline of agricultural exports. But even as oil revenue increased, the government failed to strengthen public finances. Cue in the plundering of our commonwealth. Public expenditure grew from an average of 13% of GDP during the 1970 to 1973 period to 25% during the 1974 to 1980 period. This moved the fiscal balance from its small surplus to a deficit averaging 2.5% of GDP a year. Now, this led to a rapid growth and a sharp increase in inflation. The buoyancy of the oil sector meant that the nation could sustain an average current account surplus of 1.5% of its GDP, while its gross international reserves averaged the equivalent of almost 7 months of imports. And then, to 1980, Nigeria's external debt was only $4.1 billion, that's 5% of its GDP, while debt-to-service ratio was 3.7%. But the nation's lack of a proper economic master plan meant that it was ill-prepared for the oil price collapse in the first half of the 80s. Most of its public investment was costly infrastructure projects with questionable rates of return and sizable recurrent cost implication. Also, its industrial policy at the time was inward-looking, with huge government control and interference, meaning that its manufacturing sector was largely uncompetitive. To reverse the worsening economic fortunes as regards declining growth, increasing unemployment, over-the-top inflation rates, high poverty rates, increasing national debt, and unsustainable fiscal deficits, the government of the day embarked on the austerity measures in 1982. Remember? Of course you do. And by 1986, it implemented an extensive structural adjustment program which placed an emphasis on expenditure reduction and expenditure switching policies to improve the private sector and the nation's economic growth. This led to little benefit that didn't in fact trickle down to the poor. Prior to 1986, a medium-term development plan, which was the song of the government, was being sung. The plan gave adequate priority to agriculture and industrial development and training of personnel as well. But the nation plunged into a civil war between 1967 to 1970, halting what was a promising economy. But from 1970 to 1974, another development plan was already in play. By this time, an indigenization decree in 1972 and 1974 ensured that Nigerians were in control of their economic fate. However, from 1975 to 1980, there was a third development plan. The collapse of oil prices affected the plan between 1981 to 1985. But by 1982, the government introduced an Economic Stabilization Act to cushion the effect of the reduction in oil revenue. It aimed to reduce government expenditure and also to conserve foreign reserves. But it wasn't enough. And so in 1986, the Nigerian government accepted an IMF-sponsored structural adjustment program, SAP, the very popular SAP. Again, remember that one? Of course you do. SAP's aim was to remove unnecessary administrative controls and create market-friendly environments. Although initially it recorded some measure of success, but whatever gain it made was later eroded by fluctuating economic policies between 1988 and 1989. SAP failed to realize the goal of creating wealth and promoting sound economic development. Frequent military coups in Nigeria ensured that there was little or no continuity in economic plans. And by 1992, inflation was at 48.8%. The rest of that decade was a blur until this very day. It's a mixed bag as to whether or not living conditions were better. Fast forward to 1999, the return to democracy and the start of the Fourth Republic, and since then, Nigeria has morphed into a trading outpost for goods produced in other regions of the world. Finally, as I close the story, aside from the early signs of its great potential in the 60s, the Nigerian economy is yet to experience remarkable transformation. Although it remains the most populated nation and the largest economy on the continent, one of the largest economies on the continent, the Nigerian economy continues to be mismanaged and plundered like a dead man's property. Is this entity a miracle? Yes. Nigeria is indeed a miracle. It is a miracle with economic trials and security concerns and centrifugal elements, but a miracle nonetheless. This is why it is important for us to not buy into the doomsday prophecies here and there, in some cases by Western powers concerning the state and future of our dear nation. In commemorating Nigeria's independence, it is important for us to celebrate the achievement that have brought us this far. Every milestone that we have crossed as a country is an indication of the collective will, the collective strength and grit that defines us as Nigerians. And that is the Nigerian spirit. Happy independence once again. This is still Market Insight, in case you're just tuning in, and we're going to be talking about Nigeria 64 years after in the economic sphere, taking a look at several critical sectors. Our guest is in the studio. He joins us very shortly, but not before this very short break. Stay with us. Welcome back to Market Insight. Yes, we are about to take a look at Nigeria in retrospect, doing a market analysis of what's been happening economically across certain critical sectors of the country since independence up until this moment. We'll take as many as we can manage to squeeze in whatever time we have left. But we're being joined in the studio this morning by our guest. He is Mr. Gabriel Osilama Imomoh, rather. He is an associate of the Chartered Institute of Bankers of Nigeria. He's also a management consultant and an oil and gas expert as well. He's also a policy analyst. Good morning, Mr. Gabriel. Thank you for joining us.
Yeah, good morning, Mr. David. It's nice to be here.
It's lovely to have you join us. So, Mr. Gabriel, we're going to be taking a look at Nigeria, across some critical sectors that really have made the country or the country's economy tick over the years. We're 64 years now, and as I have already outlined, some Nigerians aren't particularly happy about it. But then again, there is something to be, grateful for, as you were, the fact that we're here, and as opposed to some, prophecies, as it were, so to use those words, or so to use that particular word, we haven't particularly gone down under. We're still standing. So let's start off with one very critical sector, which we were known for back in the day: agriculture. As you were, if we're to take a look at how it was back in the day across the different regions of the country, you could say that down west here in the southwest we had cocoa, products like cocoa. We had up north perishable food and livestock. Up in the southeast there was production and the industrialization move, and then of course in the south there was oil palm and fisheries, as you were. But generally, we were a country that were neck deep in what we had and what we could produce by way of agriculture, until much later on, where you had the oil boom, or the oil discovery, and then subsequent oil boom. As a matter of fact, at that time, agriculture accounted for about 75% of our forex earnings, 68% of our GDP, and 2/3 of the country was provided for by that very sector. Many years have passed. It still feels like we're crawling. What, in your view, has gone wrong over these years?
Thank you once again, Mr. David. In your preview, you do so much analyzing the trend that has happened to the Nigeria economy between 1960 till date. It's a fact that as of 1960, our GDP was in the region of 4.2 billion, with a population of about 45.1 approximately inhabitants in this economy, with per capita income of about 93%, 93 US dollars per the inhabitants of this nation. As at then, agric account for 60%, slightly over 60% of our GDP. Now, you have also gone as far as, giving us a preview to this interview that each region of the economy, then we have 3 regions before the Midwest state came in. We are known for specific agricultural products. In the southwest, known for the cocoa. In the north, we have what we call the granite pyramids. Then in the southeast, rubber and palm oil. Now, as we progress, we seem to have lost sight of the main base of our economy. If you look at this product coming to the limelight, they were efforts right from the colonial era, and our nationalists then, the regional leadership of the Awolowo of this world, the Tafawa Balewa and Nnamdi Azikiwe in the east, they try as much as possible to give incentive and encourage the production of these products. And there was a market for it. Even then, you forgot to outline the marketing board, which were, established, especially by government, to drive the production of these products, help in the processing, and help to create international markets for the farmers. So the country could earn, they could employ people who work in this farm and food for feed as at that period. But unfortunately, when the oil boom came in, we discovered oil in 1956, at a point immediately after the Civil War, we entered to the oil boom era, which more or less government attention were focused on the wheat for. Now, that era, you cannot actually also say government have not done a lot. From the proceed of the oil, that is when we established most of the dam. One of it is the one that the incidents we had in Borno the other time. You have the River Basin Development Authorities that were to help to drive irrigations and all the rest across the agri value chain. So what happened? What happened is the Nigeria story. Unfortunately, instead of us to continue to encourage people and businesses to invest in this sector, which since we were moving from market government control of enterprise to economic actors, that is the business sector, privatization, we ought to give incentive to encourage this. Those incentives were not coming, and even when they were there, they were abused, which is lack of policy implementation or policy inconsistency along the line that had to, not getting much that is expected from this critical sector of the economy. And that is where we are now. It is so worrisome that we are talking of food import in a country that is so rich in agricultural potentials. There are some places you don't even need fertilizer to get farm, to get the optimal production or yield from crops. So that is the Nigeria story we are. We just hope that with the food security, was it an emergency the government was trying to deploy, we'll be able to activate this or maintain the already existing institutions to be able to deliver value, and, encourage extensive a form of agri extension to farmers and create security around that those farm network. I've always advocated that what we need at this time is farm settlement across the regions, across the states. When we have security challenges, the peasant farmers can no longer go to the farm and, be sure that they will return home. It's as bad as that. So if government can create cluster across this developmental region based on their cooperative advantage, I am very sure that and provide security, the necessary tools like the machineries and all of that, bush credit, farming preparation and all of that. I'm sure we'll go back to our glorious days of agriculture contributing significantly.
All right. Now, Mr. Gabriel, you've said a number of very salient things, you made some salient points. However, I want to toe the line of some thoughts, out there in the media space who have said that, yes, there have been a few efforts. I'm talking about recently, in recent years, perhaps in the last 5 years to a decade, that is. Now, the government has done, government of the day had done a few things. However, they are looking at it from a narrow lens, per se, as opposed to from a more panoramic one that essentially and holistically captures the problem of the everyday Nigerian with regards to, agriculture and its resultant end product, which is, food on our tables, as it were. So, the thinking is there is a stark lack of political will. Do you share that sentiment?
Yeah, I share that sentiment, and very strongly too. It still boils down to what I refer to policy consistency.
Right.
In the immediate past, around 2000 to 2014-15, when we have this, one of the star in this country today, additional, was heading the agricultural ministry. We know what happened. We were more or less having self-sufficiency in products like rice, and they were doing a lot of incentive, even to then importers, to say, we'll give you license to import, provided you'll be able to establish farms. I know a few companies that invested heavily in that sector. But today we are talking about importation of rice in this country. So what has happened to the investment that will be deployed to that sector? So if government can be consistent, government come and go because everybody has its tenure. But again, policies that are working, there is need for us to amplify them and make sure they are sustained. So if we have that spirit that, yes, this country is a continuum, and the population is on a daily basis rising. The import is that you have many more mouths to feed on a daily basis. By World Bank estimate, the data as of today, we're in the region of 233, points, 1 or 2, the population of this country. And the rate we are growing could be more before the end of the year. So there is need to, activate those policies that worked, like the River Basin Development Authority I mentioned. They are there, they are being budgeted for, but are they delivering value to Nigerians? So if we activate these critical institutions that we are meant to drive the process, I think there is no room for hunger in Nigeria for anybody.
Mr. Imomoh, just to, piggyback off of this last line of thought, policies that can be harped on or policies that can be harnessed per se. Back in the 70s, the National Accelerated Food Production Program, that's the one of 73, the Operation Feed the Nation of 76, and back in the 80s, the Green Revolution. All of those policies seem to be geared towards self-sufficiency as far as food was concerned. We've seen similar ones who've been redesigned or recreated, so to speak. One of them is the Economic Sustainability Act from back in the 70s, and now we're seeing the Economic Sustainability Bill that is being pushed to the National Assembly at this point in time. So based on what we had then, do you think there's a chance that we can, as I mentioned, recreate some of these policies that were, well intended for the country's agri sector? Do you think any of them, or perhaps all of them, would work in the current economic template or framework which we operate at this point in time?
Yeah. So to be sincere with you, I've not seen the Economic Stabilization Act, maybe because it's still an ongoing process. I've not read the draft, and I don't think it has been signed. Maybe it's in the process. Now,
I'm
otherwise,
talking about the agri bills, or what we have there. Yes, the
so
Feed the Nation and the
yes,
others.
the Operation Feed the Nation and the Green Revolution program were actually targeted towards sufficiency in food production. And to a large extent, these policies and the cautiousness it built on Nigeria were well articulated and they were working. That is the era you saw most retired generals, most retired professionals, they go back and start establishing farms across the country. Moving from there, the Shagari regime of the 80s also established the Green Revolution program, and that is what gave birth to most of these river basin development authority and dams. But the truth is this: how well are these institutions or this policy? How have we assured that they are delivering value? You know, then also there was this concessionary rate for Greek production. Yes, whereby borrowers from that sector through the Nigeria Greek Corporation, the one that is based in Kaduna, providing extension services and finance to would-be investors. So now, what the reality on ground is that we should see Agric as a business because we are market driven, less of government intervention. But agricultural sector is not what is going to be left for businesses alone to drive. It's what government should, by deliberate policy, encourage by providing the right environment. You know, we have cases where generals are in the farm, maybe retired general, and from there they are kidnapped. We have cases where you have women who has gone to the farm to maybe to cultivate goods, and he ended up not coming back for this or this last one is paid. So how can we provide security within the agricultural production zone to avoid this kind of incidents that is scaring people away from that sector? That need to be addressed. How can we also encourage companies that have already invested into the agricultural value chains? For instance, some big companies has gone into rice production. And now we are talking about importation of rice. Rice is a product that has less than 1 year cycle, maybe about 6 months in production cycle. There would have been a deliberate need to increase capacity of major companies who have gone into this area of production, so that we can be sure that, we got it right in this product, we got it right in the other product. This is where we have deficiency. The potentials are there, and I still believe the future and the policy government, if we were headed and harnessed, we rejuvenate that sector.
All right. Now let's cross over from the agri sector to another critical sector, energy. Now, at that time, when we had our agri mainstay, we pivoted to oil and gas, or to oil as you were, because of, its popularity, so to speak, at that time. Now, I reckon in the early periods of the 20th century, that was when oil was discovered. And then toward the mid-period, where we had our independence, we started to gain control of it. And then, of course, it even became a national, it became more nationalized, so to speak, in the 60s. And then in the 80s, cue in the oil boom. But somewhere along the line, something went wrong, as it were. And till today, as a matter of fact, back in the 80s, there were queues on the road. Till this very moment, there are still queues on the road. Surely, between that space of time, something went wrong. Can you, give us a sense of what these things were and going forward, how we can make them better, because there's still a lot of imbroglio going on in the downstream sector, particularly, especially in recent weeks. All of the stories, I'm pretty sure you've seen all of them and have followed all of them. So give us a sense of what's gone wrong in that particular chasm between our nationalization, if you like, of oil and this very moment.
Yeah, the story in the oil sector is actually of concern to most Nigerians, because as far back as in the early 70s, the idea to establish refineries to be able to produce enough energy for our use within the economy was mooted, executed with precision, and that gave birth to about 4 refineries we already have on board. The question is, why are they not working? That is the big question. Even the actors, the operators, they cannot provide a logical answers that will satisfy the average Nigeria, the everyday Nigeria on the streets. Now, the population have grown from that period to where we are now. There is more consumption needs within the economy than ever before. If we are operating at full capacity, what we have within the 4 refineries, at least we would have been able to meet a reasonable percentage and less of importation. Unfortunately, in the past more than 2 decades or close to 3 decades, we have been battling with importation of oil. And once there is supply disruption, it affects supply across the regions in the country. Now, is there hope? Yes, there is hope. The hope lies with the Dangote coming on stream, a private individual. Is petrol going to be cheap? No. In a foreseeable future, I can't see petrol coming down, but price could be moderated. The evolution we have in prices now, where you cannot be sure of what will be done tomorrow, could be moderated with what we have. And if this present regime actually want to, address the need in that sector, they should find a way to activate the 4 refineries. But my concern is this: it's not really the downstream, because that is what most people look at. Because an average Nigeria, once you have something to eat and drink today, you seem to forget what will happen in the next 2 years or 3 years. My concern is this: in a situation where OPEC quota give us close to 2.4, I think, 2.3 over 2.3 to produce and export, we cannot meet up to 1.3 production capacity.
We've actually surpassed that. Last I checked, we're somewhere at 1.6, 1.7.
Yes, okay. Within that region, it's also a thing of concern to actors. And these are due to non-state actors, either by terms of valorization or outright stealing of oil. I was having a conversation before I come here with a friend, and I said, petroleum product is not bread. It's not a pin that the ordinary man who is hungry on the street can just put out. And this is a highly guided region with security attention. And we know one of the presidential candidates has always told us that these things are being, the big boys in town and behind this. And it show up with the up and down with Dangote refinery of research. So we hope the new understanding that has been reached by supplying petroleum product to Dangote in Naira, we're able to generate and produce enough petroleum product to service the domestic and have lamina to export. I must tell you this. I want to quickly go into this. If government really need to do something For me, it can be done. Let me put you back. There was a time in this country, the cement industry, we were net importer of cement. You go to Tikanara and the port locations, all you see is congestion. People are coming to the port to load enough trailers of cement to go and sell in the hinterland. But a deliberate policy of Obasanjo, during the Obasanjo regime, encouraged the likes of Dagote, the likes of Bois, and a lot, Lafarge and all of them who has always been there, but they were not able to meet the local supply then, encourage them into full investment in that sector. And as of today, our business leaders in that sector, they are producing cement across African states. So we are more or less a net exporter of cement now. So if the leadership actually want to use the Dagote as a full stop to launch self-sufficiency in energy production, curtail the vandalization that is going on or the theft that is going on in the Niger Delta region, a lot could be achieved. And again, we have the pipelines. You know, our leaders in the past, in most cases, we blame them, but no, there was a foresight. People awarded contract, got them executed to lay pipe, to channel petroleum products from here to Kaduna. And we have supply station across the regions like Ole, Suleja, Auchi, and across the zone in the country, so that people who want to upload product, they don't need to come to the southern part of the country. They don't really need to come to Lagos to come and carry a trailer or a truck load of fuel before you go to Maiduguri. But we allow these lines to be vandalized. And I doubt if they are working as at today in Nigeria. So how do we make them work? Yes, they can say all of us are involved, but I think we need more of government action and the belief that, yes, they are elected to serve us and to add value to the society. With that, this problem could be solved.
Interesting stuff. Now, there are also too many questions I need to ask you still as far as this sector is concerned, but time is fast spent. And if I started to ask you, high chances are we're going to go well over the time. But let's cross over right now to another sector that is very critical, the financial sector, which is more or less your turf, as you were. We're not gonna end the program without going there, because that's your forte. The evolution of the financial market or the stock market or the capital market as far as Nigeria is concerned, from when this country became a sovereign state up until this moment. In recent history, I think it was between 2004 and 2006, there was a huge paradigm shift, so to speak, in the financial sector. We saw mergers, we saw acquisitions, we saw some banks that we knew hitherto going under, some of them getting submerged, if you like, some of others getting getting their identity under another stronger entity, as you were. So all of those things led to the repositioning of the financial sector. And then even more recently, 2011, 2012, if memory serves me right, we had the cashless policy initiative. Now, circling back right to where we are, how do you see all of these, or how has all of these from the beginning to this very moment played out economically? And are there things we can do better from here on out?
Coming to finance sector, relatively you can see that seemed to be the most dynamic of all the sector, apart from the telecom. If you look at the evolution from the 1960s, largely encouraged by the bold step the then CBN governor, now governor of Anambra State, Soludo, took towards the recapitalization of those banks, which put them in the right footing to be able to venture into critical sectors of the economy. The idea was that they should be able to do big deal business and stimulate economic activities across a spectrum. Now, why do I say they are more? There was a time in this country where before you go to bank and have a successful transaction, you need to know somebody there, and the queue can be very scary. We have moved after that capitalization policy to where you can actually own a bank, own an account without necessarily visiting a bank. Apart from few challenges, you might stay for 1 or 2 years without entering the banking hall. The evolution has been so tremendous that you can move money and increase the velocity of money. Money can easily exchange hands from one person to another, either for commercial or for social reason. So I see that sector very dynamic. And of recent, we have a development which most of us call the fintech, which seems to be taking over the new normal in the industry. And it's quite encouraging that they are doing tremendously well. But there are some pitfalls which government, they need to intensify regulatory activities across that sector. They need to emphasize on training, because you see if you engage most staff in the sector on sector level discussion, they are off. And meanwhile, instead of them to invest in training and retraining activities, they seem to hire a low cost, permit me to say, if I have to use cost for an individual. They look at what, hired contract staff or casual staff, a lot of casualization going on within the industry. Aside from this, the beef of the regulatory activities within the sector, such that sharp practices will be reduced. They need to be, the regulators need to be up their game, because the sophistication in the IT deployment, it seems the regulators cannot, they are not able to match that trend. They need to up their game so that they will be able to checkmate fraudulent activities with that region. But there's a certain area of the finance sector that is often concern for me. If we are discussing the economy as of today, it's arising from the MPC that was just heard, and the CBN is coming out again with an MPR that is in the region of 27.25%. And the meaning of that is that interest rate will be in the region, prime lending rate will be in the region of between 32 to 33% in the market. You discover that if we allow this, it's more or less discouraging investment and production.
So you're saying, Mr. Imomoh, that this hawkish stance by the CBN is going to have
a negative impact on productive activities. There is no genuine manufacturer.
But it was well intended, because the idea, as you were, is to drive down inflationary pressure.
Yes, the inflationary pressure in the economy is cost push. It's not demand push. That is where, as much as I respect the view of members of MPC, they are well-learned professionals, but they need to be in touch with the ordinary participants in the economy. The inflationary pressure we have and the increased demand for FX, these are what the policy target is trying to checkmate. It's not as a result of demand, the aggregate demand, the average. Now, if you want to combat those activities, you need a lot of physical measure. The economy management is starting on a two leg. You have the physical authorities, which has to do with the Ministry of Finance, the government, the executive arm. You have the monetary authorities. So you cannot actually use the monetary tools to arrive at the destination. So what we are doing, if you say CRR, the cash reserve requirement is 50%, and you put your MPR at close to 30%, to be specific, 27.25%, and you put liquidity ratio that high, the meaning is that the bank have no enough loanable funds with which to finance even the Greek sector we dwell much about. We're able to finance the manufacturing sector that we need most sincerely at this critical time of our development. Remember, we are a developing nation. We are not developed. Even in developing nation, they encourage credit. So the credit is more expensive to purchase. Then you discourage people to access credit and be able to plug back into productive base. And I think that is where they need to have a rethink. And to do that, they need the economic team to really sit down with the monetary authorities in order to drive home a solution that will be serving the majority of Nigerians.
Okay, thank you very much. Too bad we don't have the luxury of time. I would love to go on with this particular conversation and even possibly touch on some other critical sectors, but we have run out of time. It's been a pleasure doing this with you, Mr. Gabriel Imomoh. It's been a real good pleasure doing this with you. Thank you very much for joining us on the program today.
Thank you, David. It's nice to be here.
Yes, thank you. Mr. Gabriel Imomoh is an associate of the Chartered Institute of Nigeria, and he's a financial and management consultant as well as a policy analyst. He's done justice, albeit extemporaneously, and that's because of time, to some of the hot topics on the table vis-a-vis the critical sectors of the economy. We've been taking a look retrospectively at Nigeria economically 64 years later. We do hope that we've given you something to ponder on. Thank you for joining us on today's edition of Market Insight. Again, happy Independence Day. I am David Chiedu. Stay tuned for the news at the top of the hour. Good morning.